the sales you've made recently. You've talked quite a lot about those in the press, but you managed to time them very well. Here's a question. You managed to time the sales of Meta and PayPal well. How did you manage this? And you're not allowed just to say, because I'm good at my job.
Yeah, I would actually say that we were fortunate to have exited both companies before their results. And I think if you follow what happened since they reported at the beginning of February that the shares is down another 30% or more. But the thing about these two companies, obviously they have quite different PayPal and Meta. We have gradually been reducing our position last year already. I think as far as Meta is concerned, that we dislike when Facebook decided to change the name to Meta, which means that they are going to be very committed into the metaverse, spending a lot of money. They spent over $10 billion last year. It's likely that they're going to spend another $50 to $100 billion in the next 5 to 10 years to make this work. But the problem for us is when based on our valuation model, which look at free cash flow yield, that is after capital expenditure. Like when you're spending so much money on CapEx without the cash flow generation on the back of this project, it just makes the shares very expensive. And then if you look at then at the same time, the core business, which they are seeing a lot of headwind from the changes from iOS 14.5, the privacy stuff, hence Facebook have got less data about us to sell to advertisers, hence they have seen a bit of a hit, and then increased competition from TikTok in the US. So you put all these three things together, the future is a bit uncertain in terms of how the company is going to go. I mean, it's not, Facebook in itself is not going to disappear. It's still a very profitable company, but then it's just the valuation is no longer attractive. So we have been gradually reducing it and managed to exit completely before the results. I think PayPal is also equally an interesting one, but slightly different perspective, that we have held PayPal for a long time since inception. We do like the business. We do like the management team. But I think what happened recently about the rumor Pinterest acquisition, which we definitely dislike sometime last year. And at the same time, if you look at the track record of Dan Schulman, which has been one of the most exceptional CEO in the tech space since running PayPal, and at the peak, PayPal was at about $300 billion market cap. Now it's just over $100 billion, which is still very big. But then if you look at the shareholder return from PayPal versus the NASDAQ 100 index in the US since 2015, that he started running it, that PayPal shares has now underperformed the NASDAQ 100 index. So I think the credibility of Dan Schulman is now in question. At the same time, he has been running the company for about 7 to 8 years. He's now 63, 64. I'm not sure whether he's going to be retiring soon, but then he could be forced into retirement. And then we look at the succession planning within PayPal. There's no one who could be stepping up to run the company or to fill his big shoes. And at the same time, you get someone external coming in, the direction of PayPal could be different. And so I think from a shareholder perspective, we would rather sit on the sideline. That I think if you put all these two companies together, we talk about whether when the market recover, the growth recover from value rotation, they might not recover. I think there's some permanent loss of capital that's been damaged in these two companies. So hence, I think that's something that investors need to probably remind themselves that it's not all companies are the same. Some companies are actually some specific issues.